This is a video that I think nobody who enters a prop firm ever wants to make, and it's not a situation anyone really wants to go through. I have seen a lot of videos of the guys and the girls who have got funded, have been super excited by it, and a month or so later they come out and say, I blew my account. It looks really, downbeat, they're upset. And often it's due to them going, I made a ton of mistakes. I um, began chasing losses. I went off my plan and ended up just trading really badly. And that's relatable. I've gone through periods like that in the past, and there was a big part of me that didn't even want to put out a video like this because on my channel I've got tons of videos saying how you can improve your trading. And a lot of them are, or they're mostly psychology based. And how could I come on here and say, I've made a ton of mistakes, I've blown an account? Everybody's going to go, well, I'm not going to watch your videos, I'm not going to buy your course. And I get that. I'm kind of not going to make that same type of video because I didn't actually make a ton of trading mistakes. I didn't chase losses, I didn't go off plan. I made some mistakes in where I was trading a bit sloppy, but that wasn't why my account got blown. And at the end of episode 5, I was talking, or during episode 5, I was talking about how I was going to scale up slowly with micros and everything. And in the end, the only reason I blew my account was because I completely changed my whole approach to how to trade a funded account. Had I not done that, I would be sitting on, a few $100s of profit despite not trading incredibly well. And, I probably wouldn't make a video for another few months because progress was a little bit too slow for my liking. And it would have kind of been, a bit dull. And instead, I had a rethink of how to trade a funded account. I spoke to a few people who have traded them and kind of began to develop my own view on the most efficient way to use a prop firm. Unfortunately, I then implemented that idea at the wrong time, and I implemented it halfway through a day, which is a big no-no based on looking back at my historical data. And because of that, I blew my account just before I end up making, so having a lot of green trades in a row. Sucks, is what it is. I don't think I actually made a mistake other than the timing of when I implemented what I'm doing. I'm sure I'm going to get tons of people in the comment section saying, or if I do get people saying, oh, you shouldn't have done what you did. I'm going to show you why I think that what I am doing now is actually a better way of doing it. So to cut down to the bare bones of it, I was trading micros and I switched to trading minis. And I'm going to go through why and yeah, just break that all down. So let's make my face a little bit smaller. We don't need that covering up the whole screen. And start off by sharing the email that I received from BULENOX confirming that my account had been terminated. This is from BULENOX. Hi Nicholas, even the greatest traders have made mistakes on their trading path. At the same time, it's a great opportunity to learn from your own mistakes and continue your journey. Unfortunately, your account balance exceeded the maximum allowed trading drawdown, and the account has been terminated. Please let us know if we could assist you with your trading profile. Also, you may try again for another qualification account with BULENOX, which we will come on to in a few minutes. So the first thing we want to show is my trading journal. I mean, this was my first live journal, and I thought I was doing okay. I was up, I can't remember how much on the, it was a bit weird because I was trading partly on the funded account, partly on a cash account. And that meant that like when I had I have two sizes, when I had a bigger win, it wasn't actually reflected in my funded account because half of the position was on the funded account, half was in the cash account. I withdrew that cash account because I realized it wasn't actually helping out my trading. It was making it a little more complicated. And initially you can see that when I started trading live, My performance wasn't that great. The purple line is the potential of the strategy, the way I was trading it then, and the green line is my actual return. And you can see I was up 10R, but because of the discrepancies in size, there was also a bunch of like the initial this initial spike was all on a cash account, meant that my actual trading account, when I got to the end of these few days here, at the end of February 3rd, I was actually down about $400 on the account. No big deal. With the size I was trading, 1R was like $40. It's not that big of a loss. I'll make that back in a day of a really good day. And yeah, it was nowhere near the $2,500 trailing drawdown. When I got to the end of this week, I realized two things. First of all, I was starting to trade a bit sloppy. This is a really good example where the trend line that I had drawn was kind of a big mess. This is not a very clear trend line. And what I and my trading buddy were doing was taking our rules, and instead of applying them black and white, we were starting to make little exceptions. So this here, another one, my trend line here is not a valid trend line based on what we have as a strategy. It was very much we're looking for a trade rather than we're waiting for our setup to appear. And I made these mistakes. They was still, I was still making money technically doing this, but it was very small gains and the mistakes were starting to creep up. So the first thing that we realized, we were getting a little bit sloppy with our execution. This is not why I blew the account, just to say that. And as well as that, we found, I'll bring up this real quick, we found that some of our trades were not actually performing all that well. And these in particular, I'm not going to go into too much what they are, but this particular subsection was showing quite a lot and they were losing. So what we did was we removed these trades from our trading, and we also focused on being as accurate as we can. And you can see that after we had that meeting, discussion, whatever, and changed the approach, we actually showed some. I actually had a really good performance. I only made this last trade. It doesn't really count for what we're talking about here because it's paper trading, but all of these, perfect execution, and I went from being down 7.4R to being up 12.4R, all on my own execution. So that's a 20R turnaround. And you might be going, okay, how have you blown the account? And the sad thing is, had I stuck to the rules that I'd set previously, I very simply would be here right now. I wouldn't be making a video. I'd be up $400 on the account. Like, yeah, whatever, fine. The reason I changed to minis was this. I ran a sim, and I created the sim myself. I'll very quickly open it. Okay, so this is my simulation. I plugged in. I won't go through exactly what this is. All this graph shows me, all this table shows me here is the result, the return of the strategy, and there was some the random number generators. And what I was finding was that the likelihood of me making the required 7.5R to get funded, I ran it 100 times. And I've ran it more since, but I've ran it 100 times, or 200 times with slightly different numbers, and found that the likelihood, if you executed the strategy perfectly, trading with minis, the likelihood of getting funded is in the 90% region. And when I went back through my data, I found that at no point had you applied the strategy I used for getting funded with my account, with my strategy, would I have not got funded. Right, it was a case of, okay, I got funded at this point, we start again at the start of the next day, would have got funded again and again and again and again. And what this told me was, when I switched to trading, once the account has been funded, I should be switching to minis, I should be trading minis the whole time, because again, there is a 90% plus chance that I hit $3,000 before I go on a $2,500 drawdown. And like I said, I ran this again and again, and you can see, like, in this run here, I never went on a big enough drawdown and ended up plus 25R before having a 7R drawdown. Awesome. And this is actually, this version of the sim is actually slightly more aggressive. In the less aggressive one, the likelihood of drawdown was even lower. So what ended up happening was, after running this sim, it became very obvious to me that there's no need to stick with micros. Go straight to minis, because there is a 90% chance, even with a funded account, there's a 90% chance that will take that funded account to $3,000. And then there's another 90% chance that that account goes from $3,000 to $6,000 before I even go on a $2,500 drawdown. And it's probably even higher to get from 3,000 to 6,000 before blowing the account, because once you get beyond 2,600, that max drawdown or that trailing drawdown stops. So if you get to $4,000 of profit, you have $4,000 of drawdown. So in other words, once you have a funded account, there is probably an 85% chance, assuming that you execute accurately, and we can see from this that I am trading incredibly accurately, there is around about an 85% chance that I take a brand new funded account to a point where it has got $6,000, $8,000, $10,000 of profit in it without blowing that account up. I ran these numbers multiple times. I double checked, triple checked, and it was, that's what it is. So as a result, what I did was I went on the 8th, I decided I'm going to, or on the 7th, I thought I'm going to buy a new funded account, and I'm going to try to get that one funded, so I have 2 funded accounts. And I knew there was a 90% chance of me getting funded, and my decision was that once that account was funded, once I passed the qualification on the second account, I would trade with minis on my main account. And what ended up happening was that I got funded. Second trade on the 9th. I mean, you can see these are all the trades I took. So we had a winning trade. This made $1,000. Then I made another $720. Then I lost 800 and lost another 400. Okay, so I was up a little bit on the account. I think I was up like 500 or so. Come to February the 9th. I have a trade that made $1,000. This is on the qualification account. And then another trade that made $2,000, which meant that I was now funded on a second account. And I'll show you this account in a moment as well. So halfway through the 9th, I was like, oh, I've got my second account funded. My first account, which I had taken those trades as well on, is now pretty much back at break even. I'm going to switch to trading minis. And this was a horrible, horrible mistake. And the reason for that is all of the when I'd looked back over my previous data and seen would I have got funded here, it was assuming that you started at the start of a day. And why that is important is if the first trade of the day is a loss, then you stick to smaller size. And once you've had 2 losses in a row to start off, you stop trading, right? You're done, because you don't want to, you'd be down $800 and $1,100 is maximum risk. Unfortunately, I was already up 400 on this day, so I was like, well, I've got even more risk to play with. And I then took a trade that lost $400, so I was then break even on that day. Another trade that lost 400, and another trade that lost 400. And it's pretty rare for us to have 3-4 losing trades in a row, as shown by the data. Because I had done this in the middle of a day, it meant that I actually took those 3 losses in a row. This put me down about 800 on the day, and the next 2 trades, were I took with smaller size. So I ended up on that day down $650. On the 13th, I took another loss. On the 14th, I haven't actually got a screenshot of this one, but I took another loss. And that meant that going into the 15th, I had around about $300 of risk left before I hit the $2,500 maximum trailing drawdown. On the 15th, the very first trade that we took was actually a mistake. This was not a signal for me. I think there was a little bit of emotion and a little bit of frustration based on how unlucky am I that I've just, at the moment I start trading bigger size, instantly lose, 5 trades in a row. So I think there was a little bit of that. I can't deny that. Got in this trade a bit too without really letting it actually set up, and the account got blown. Obviously, the next 2 trades were both winning trades. And this is what I was saying. Had I not started partway through Thursday and I'd have gone, okay, I'm going to wait till the end of Thursday, or Thursday the 9th, I would have gone into this week with just having now, with my account at about $50 in the negative. I would have lost 400, then 400, and another 400. So yeah, I'd be down 1,200 on the account, but I would have then made 1,000 on this trade, put me down 200 on the account, and 2,000 on this trade, put me up 1,800, and then another 1,000 on this trade, and I would have been up $2,800. There were other trades that happened yesterday. In the end, I would have ended up around about $2,200 if I had executed it accurately. If I had waited to implement this approach, I would be right now almost at the point, I'd be like 1 winning trade away from being beyond the maximum drawdown. I would be increasing risk. Okay, I put it in the wrong time. It is what it is. I feel a little bit idiotic. Well, not idiotic for it. I feel a little bit silly for doing it, because it was just, I should have been a little more patient. But I don't have too much disappointment in blowing the account, because I did the right thing. Now, on top of that, I decided when my account was at this sort of, only had $300 of risk left, I decided that I would buy another account, because I wanted to have 2 accounts so that I would always have, the idea being that once I can trade the first account with minis and not worry, because if that one does get blown, I've got another one ready to go. So I actually started, and I bought another funded account, and took these trades here and got funded. So I'll bring over my NinjaTrader right now to show you the cash value of these. So these 2 trades down here, I'm not going to show the account number, obviously. Both of these, I need to hit the $3,000 mark. This one here, the $53,101, this took me 4 days to hit the targets. Today was the final day that I had to place a trade, so I've sent that one off to BULENOX, and will hopefully get my qualification certificate through today and start trading live on Tuesday. And this second account here, this one that's it's $53,075. This account actually took me 2 days to get funded on. And this, for me, is more confirmation that applying this approach, so far I've applied it, and I've had 3 accounts funded. And the first account I got funded, I could have got funded twice during that period if I hadn't made the mistake early on of what will happen if I hit the max drawdown for the day. Well, the account gets blown. If I hadn't done that, I got it funded again. I also made other mistakes. So that means that during the qualification periods, I've had 4, maybe 5 potential accounts funded. Without a single one had I executed my strategy perfectly, which I'll keep on going back to the fact that I'm much closer to that now than I was before. I would have had 4 or 5 accounts that have got there, or the equivalent of 4 or 5 accounts, or that like, how to explain this? I've got 3 accounts that have made it, but if I'd have executed my strategy correctly in that first run, I could have got funded 2 or 3 times over. This, to me, actually proves, get rid of that again, that the taking minis approach works. And the cool thing is, you only need one of these accounts to make it to about the $10,000 mark. That was when I did my sims. The biggest drawdown that my strategy is likely to ever have is around about 25R. The likelihood of that happening is incredibly low. But that was the number, like, I ran it on massive samples of like 3,000 trades multiple times. The largest number I got was 25. Once my account is over $10,000, I will have over probably about, I don't know, 60,000 to 100,000 trading samples would never have gotten a drawdown big enough to blow that account. You only need that to happen once. and then you have an account which is safe, and is making, and 1 hour is $400. My strategy at the moment is showing around about, I can bring it up here, is showing around about an expected return of 64R per month. I round that down a little bit because I think I'm getting a few less trades now than I was. I'm assuming there's some best fitting early on. Probably 50 is a far more accurate target, maybe even 40. Even if it's at 40, 40R times 400 is $16,000 a month. When I ran through these calculations and realized that when you buy a funded account, there is about an 80% chance, between a 75 and 85% chance that you take that brand new funded account, you get it qualified, you get it to 3,000, you get it to 6,000. And once you're at that point, you're pretty safe. And you will then have an account that you can make $16,000 a month on. It became an absolute no-brainer that what is the point of trading micros and building it up slowly? That's my approach. My approach now is when you get a funded account, you've paid $200 for it, $250 for it, whatever it is, that's the risk. Use the fact, for me, I can use the fact that my strategy gets funded like within the 10 days, it gets funded within 10 days, like pretty much every time I've ran it. Like probably 70% of the time it gets funded within 10 days. There's another 20% it gets funded within 20 days. So that means if I do blow an account, I can just buy another one, and a month later, most likely, I have that account that I'm trading as well. And it's for a very, very small amount of risk. The risk to reward with this approach is absolutely huge. Now, I am sure that there are going to be people who will say, you shouldn't be trading minis, you've got a funded account, you should use it, respect it. And my counter to that is, if I can get an account funded in a handful of days, why would I not do that with real money in the real money account? Because if that happens 2 or 3 times over, which so far in my in my data it's happened, probably 50-fold, if not quite that many, 40-fold, 30-fold without a single failure, why would I not do that? Build the account to 10k, 15k, 20k, and then I've got an account that I can very comfortably go, oh, I'm making $16,000 a month on. And if you have 2 accounts, that's $32,000. If you have 3 accounts, that's pushing $50,000 a month, all for a very, very small amount of risk. So I don't really feel the need to defend my decision or anything like that, because I can justify it to myself. Really interested to hear what other people think about this. I'm sure lots of people have gone through the same experience of blowing an account. So yeah, let me know down below what you think of this approach. Let me know if you've gone through blowing an account. Really interested to hear. It's it's kind of one of those, like, it's disappointing to make the losses, to blow the account, but at the same time, I feel like the approach that I'm taking now hopefully will mean in 2 months' time I'm going to make a video on how I made $20,000 in a month. So that's where I'm at. Thanks very much for watching. We'll continue this journey. I don't think I'll put out a video every week, but we'll see how it goes. Maybe I'll have another video in a week's time saying I blew another account. My strategy just fell apart for a week, but we'll see. Thanks for watching, and I'll see you in my other videos. Thanks for watching till the end of the video. Just adding a quick piece in here to let you know what extra services I have to help you become a better trader. On my site, guidedtradingmeditations.com, you can find my new course, The Trading Blueprint, which gives you a full guide on how to create an edge, test it, start trading it, and scale up. There are sections included on how to find weaknesses in your trading, and then how to resolve them, as well as many other bits of information that I've gathered in my years of experience. The aim of the course is to make you a fully independent trader, so you don't need to pay ever-growing monthly fees to be in a chat room. There's no specific edge needed. You can use this in any market with any trading style. If you're at a stage in your trading where you're struggling and would prefer a more in-depth look at your own personal weaknesses and ongoing support, you can also book one-on-one coaching with me on the site. There's a cool breakdown on the screen right now, so pause the video and read through it, and if it's something you're interested in, check it out. There's a ton of other content on the site that I'm really proud of and I've really enjoyed making. So if you're interested, please check it out. I'm sure there'll be something on there that can help your trading. You can reach me on Twitter. My handle is in the description down below. You can send me a DM if you'd like any more information. And make sure to like and subscribe to stay up to date with future videos.